Welcome to the Rigatoni Capital podcast. It is the morning of April 13th, pre-market. A very cold and cloudy day on Wall Street. It's not that cold. It's actually 59 degrees, but definitely gloomy. And you know what that means? It means stocks are going to be red this morning, and they are. The negotiations between Iran and the US and Pakistan didn't go so well. And it's my opinion they are probably closer to a deal than not closer to a deal because they both departed. And I think that's always the first step in terms of these type of negotiations. Definitely Iran has some leverage, and I don't think that's them trying to gaslight the world. They do have leverage, and it all comes down obviously to the Strait of Hormuz, right? So apparently, allegedly, U.S. is going to try to blockade the Strait of Hormuz, and Iran's already countering the blockade. And who knows how true that really is. And I think it's quite disappointing that we're even talking about this. I'm a little over a month later. Remember when they decided to strike, and February 28th was the first strikes that the U.S. Israel struck on Iran. Remember, that was February 28th. It's now April 13th. Remember, 2 to 3 weeks, and we're in and out. We're in and out. Remember, it's like we're trying to slow the COVID spread. Stay home to slow the spread. It's the same type of feeling I get that we're being bullshitted. Now, I could see that, the U.S. kind of just walks away and throws their hands up. That can happen. Stocks are red. That's really all that matters. And stocks aren't really that red. So like the S&P was down a little less than 0.5%. The NASDAQ 100 was down a little bit of 0.5%. And Bitcoin's green. I mean, there really isn't a lot of wreckage here this morning. Surprisingly, I think people are going to wake up on April 13th and scratch their head and be like, why isn't the market down more? But headline news will show the Dow Jones is down a ton. And the Dow Jones is down because Goldman Sachs, a large weighting in the Dow, is getting beat up pretty good here, down about 4.6%. is what it says pre-market. That's because they came out with earnings. Their earnings looked quite good, quite good. Goldman Sachs reports record quarter in banking and trading. Banks profit rises 19%, driven by resurgence in deal activity and market volatility. Remember, profit's not sales; it's different. Their profit is what they're calling net income, and their revenue also did really well, and banking fees did well. Market businesses revenues up. Despite strong earnings, Goldman Sachs stock is down nearly 7% this year. I guess that's a year to date, right? But Goldman's has been on a tear. I mean, who are we kidding? There's a reason I wanted to buy it when it hit 785, which was the lows of the year. I mean, look at the bounce it has had. It is incredible. If you can see it on my screen, I'm showing you the bounce Goldman Sachs had. One of the most beautiful charts I've seen. It even retested the 200-day and bounced right back up, and now it looks like we're coming back down. Anyway, look, Goldman Sachs, that's a once-in-a-lifetime buying opportunity. I'm not saying it's a buy here, but it definitely is a little confusing to me why it's selling off. And right now, the earnings call is probably happening right now. What I would do is listen to the earnings call and definitely do your work on it. That's the fun part of the job of being a long-term investor. If it were your full-time job to be a long-term investor, people think you just sit back and read and kick your feet up on the desk as a long-term value investor. That is what you do. But when you're reading, you're going to be reading about the Goldman Sachs earnings report that just came out. Joe Kernan, when I was driving to get my coffee this morning, was pretty much saying that it had something to do with maybe expenses. Goldman had higher expenses, or they are guiding higher expenses. Who knows? Who knows? Nobody knows until you do your own homework. And don't rely on X. Don't rely on Zero Hedge. Don't rely on StockTwits. Don't rely on any social media app. Do your own work on it. And I can promise you, like someone like me who's heavily looking at Substack all the time, Substack is the best place to get financial information, in my opinion. It's like the new Reddit, I would call it. It's way better than Reddit. And the writers on Substack that follow financial markets, they're not writing about Goldman Sachs. I mean, it's pretty rare that they are. Like, they're not going to do a long form post on it. And to be honest with you, I'm not going to do that either. But I will talk about it on this show. This is the type of show that Rigatoni Capital is. It's a show for long-term investors. It's not a show for traders. It's not a show for somebody buying VIX to hedge as insurance. It's not that type of show. I hope you understand that. It's a show for boring long-term investors, lazy long-term investors, folks that, don't buy all the time and they don't care about headline news, but I am trying to talk about it through the lens of a long-term investor. And I don't know anybody else that does that other than long-form podcasts when they interview somebody. I don't know of a daily market show like this that's just about long-term investing. Everything's about swing trading or derivative trading, or it's, revolved around this idea that it's okay to hedge your portfolio. And I mean, that's not how I learned about investing. I learned it the hard way, which is to wait a decade to see your returns. You know what I mean? It took me a decade to appreciate what I had built. And I'll show you my portfolio right now, just so you guys get an idea of what my portfolio is. These are my top 20 holdings. I don't know why it's not working. Hold on here. Maybe if I go like this. Is that working for you guys? Wish it looked cooler. Let's try this. Here are my top 20 holdings. As you can see, NVIDIA is my largest holding because it just continues to grow and grow and grow, and it's such a large percentage of my portfolio. I have trimmed profits in NVIDIA. I trimmed most of my profits in the year 2023. If I hadn't done that, NVIDIA could be easily well over 20%, maybe more of my portfolio holdings. And, I'm up 4,000% on that name. And then everything else follows down the chain from there. Like the NASDAQ 100 is my second largest holding. And if in a perfect world, I wish it were my number one holding. I can't control that NVIDIA is my number one holding. Like it kind of deserves to be there. So I'm letting it be the quarterback of the team. And I got plenty of Bitcoin in other portfolios. The Bitcoin I have in this portfolio is quite significant, in my opinion. I don't talk dollar amounts to you, but I'm telling you that, the iShares Bitcoin ETF is one part of the way I have exposure to Bitcoin. And then I have direct exposure to Bitcoin. And I always recommend to take self-custody of your Bitcoin and buy it on the Strike app, which is Jack Muller's app. Do some kind of dollar cost averaging, and then, eventually take it into some kind of cold wallet. And that's the way to really own it. It's just like owning a bar of gold. You want to take the physical hard asset, or you want to take it into your own digital or physical cold hard wallet. That's how you own Bitcoin. But, for the sake of this portfolio, I show you how confident I am in Bitcoin by buying the BlackRock ETF. Now, Amazon has been performing really well. Amazon, for me, I'm only up 107% because I've kind of been buying it throughout the years. But Amazon is a stock that had such an unbelievable week last week. If you look at their returns, and I'll show it to you, I think it was up like 6 or 7% for the entire week. I mean, that's a crazy, volatile, strong week for something like these mega cap tech stocks. I mean, Google had an unbelievable week last week, and of course, they were trying to show like, hey, the Mag 7's back, and I'm saying the powers to be, the large institutional buyers, were probably buying the mega cap tech stocks, and retail was probably not, or maybe they were chasing. I'm not sure, but I can promise you that was probably not retail buying mega cap tech. I mean, there is incentive for the NASDAQ 100 or the top 10 tech companies in the world to do really well. Everybody has an incentive now. I mean, TSM, what an unbelievable run it had. NVIDIA had a nice little week. And, there was a lot of headline news. Meta came out with their version of their AI. I think it's called Muse, right? Amazon and their chips that they allegedly could be selling. We heard Andy Jassy talk about that on an interview, saying like, hey, we got all this demand and this could be a run rate of $50 billion. And, he goes into details about the chips that that Anthropic is going to be buying and wants all of their chips. I mean, big news on all of these big mega cap tech stocks, except for like Apple. We didn't see much new headline news on that, but it's almost like, in my opinion, there was the ceasefire with the US-Iran war, and then we get all of this flurry of positive news. Did you guys notice that? Do you guys notice that? I noticed that it's almost like these large companies, the stocks that we all own, they hold back on reporting positive news until until some kind of geopolitical macro issue is resolved. I mean, that's my conspiracy theory. That's what it feels like to me. So we go down the list. Look, Palantir is on here. We're going to talk about that real briefly. And let me set my timer because I don't want to talk too long. Set timer for 15 minutes. We got Palantir on here. We got Lam Research up 718%. I remember buying Lam Research in the year 2000 and I want to say 17. And somebody, my coworker, was like, wow, that's pretty like risky, volatile. Like that's kind of bold. Like he thought it was bold that I was buying Lam Research. Yeah, I was probably like 29 years old or 30 years old. Actually, no, I was probably like 30, way older than that. I don't know how old I am. So I got Caterpillar up. My total gains on Caterpillar is 460%. So I'm not showing this to you as a humble brag, but I am showing you like that I'm proud to be a buy and hold investor because I get to present to you something like this. Now, is it perfect? No, it's not perfect. Look at strategy. I'm down 55%, but I have conviction in a few of these names, and I'll explain to you what happened. So I wrote to you guys. I wrote to my Substack newsletter subscribers. This is all free. I do all of this for free. I put a post out back on April 2nd that said why I didn't buy the dip. And I explained to all of you podcast listeners and my Substack newsletter folks, I didn't buy it because I didn't like that the broader market pulled back only 10% and it didn't stick for very long. I mean, we were only down 10% for like a day. That's not long enough for me to get super excited. On my 2026 watch list, there were opportunities to buy the dip. I don't own American Express. I would have bought American Express around 292. Just using that as an example. And I decided, you know what? 10% pullback on the broader market, not enough for me to get excited. So I'm not buying the dip. Fast forward to Friday, April 10th. On Friday morning, April 10th, I added to the following positions: Palantir, AppLovin, and the iShares Bitcoin ETF IBIT. It is my opinion that all three assets are high risk but high reward. There is one thing that all three assets have in common: they have been dragged down by the broader sell-off in software stocks. Due to the AI disruption story, I am making a bet that these two stocks will not be disrupted by AI, and that Bitcoin will eventually become disconnected from software stocks. I kind of give you like my sports analogy. This is a newsletter I posted this morning on Substack. You can find it. It's called Portfolio Update, the dip I actually bought. And I want you guys to know that I appreciate everybody on Substack that liked it and follows my writing. Sports analogy time. I kind of explained to you the process I have in terms of why I bought these three beat up stocks in software. They are very risky, controversial, very volatile type of stocks and assets, Bitcoin. You know, people, you either hate them or you love them. You think Palantir is a bubble. I don't even disagree that it looks like a bubble. I think it does on the surface. I think Palantir has always looked like a bubble on the surface. But when you understand the business and you believe that, you know, this could be a home run for you, even at a $300 billion market cap, you know, I have taken the gamble, not a gamble, but I've taken the bet on this explosive stock, this explosive company, this company that looks like it's going to be in such high demand for enterprises around the world. And I think they can replicate what they have done with the U.S. government, I guess the Pentagon or the Department of Defense. So I explained to you like, hey, but at the same time, I still want to own some really good, but more sturdy kind of, I don't want to call them blue chip. And I don't want to call them value versus growth, because that's not true either. Because look, Caterpillar is a growth company at this point. If you look at their stock chart, it's a growth stock, okay? And it's a growth company too, right now with the cyclical, you know, raw material, infrastructure build out and everything like that. And, you know, Caterpillar is like, must be making a lot of money, right? In this kind of environment with data center infrastructure, and think about all the energy mining and the gold and silver mining all around the world. And yeah, it's not maybe killing it with construction, like the type of a construction that we know of, but you know, it's so valuable. And you know, they even have these gas turbines for the data centers and all this stuff. Caterpillar's like been killing it, right? So I don't want to call them like, oh, that's my old boring value stock that I own, but it is. These are my sturdy players on a sports team. I have something like a JP Morgan, a Berkshire Hathaway, for example, Chubb Insurance. These are the I call these my consistent and gritty players. And then I have these flashy wide receivers or running backs. And I consider that to be Palantir, AppLovin, Bitcoin, and strategy in this situation. Again, they're controversial. They're high risk. They're high reward players, but not straight gambles, because I've done the work on them. We talk about how, look, I know a lot of people that listen to this podcast. I mean, they are trying to pick some of the stocks in the IGV that have been getting destroyed. Some of them I know are picking, CrowdStrike, or they are picking Intuit or ServiceNow or Adobe. We know that. We know this. They're trying to find rocks in the rubble after the bomb went off. But is the bomb's like still going off? That's kind of like my point. But I think it was time on Friday to step in and start to look at Palantir, AppLovin, at least just to add to my position. I'm adding to a position. It's kind of like a Kathy Woods buying on the way down. I don't recommend doing that all the time. You have to be diversified to do that, right? So we talk about the portfolio management side of it, the risk management side of it. Remember, it's all about portfolio risk. You know, you're trying to produce a piece of art that can compound in the future. So that's what you're really doing. And then we talk about Palantir versus Anthropic again. I already did a YouTube post on this, how I didn't really agree with Michael Burry's stance on Anthropic eating Palantir's lunch. And I even show you the YouTube channel or the YouTube podcast I did last week. I try to explain in the best way possible why Anthropic probably won't eat Palantir's lunch. And the best way to do it is kind of just to review to you, make sure you understand what ontology is. If you don't understand what the ontology is, then you're not going to understand Palantir, and you're not going to understand. You'll listen to someone like Burry and think that Burry knows what he's talking about when it comes to Palantir, and it seems like he doesn't understand the fundamental business of Palantir. You know, the meme or the inside joke is no one understands what Palantir does. Well, if you don't understand what Palantir does, you have to do a little more research, and you have to go on Palantir's YouTube chip page. And, you know, I'm showing you a video, for example. It's literally only 5 minutes, and it explains to you the ontology system. Is it a little bit over my head? Yeah, but I worked through it this weekend. I spent a lot of time doing, trying to work with an LLM of my choice and trying to explain this to me like, you know, I'm not tech savvy, because I'm not tech savvy at all. And I think it did a pretty good job. And I tried to explain to you what I understand about Palantir's business, and then what I kind of am learning on the way here. And, you know, I kind of try to break down the differences between the advantages and the disadvantages of something like Palantir and Anthropic. But really, they really shouldn't compete with each other. That's what we learned, is that an LLM like Claude really doesn't compete with Palantir. They do work on top of each other, and they can be worked together. They can integrate together, but they really don't work. They really don't fight against each other. Now, a certain enterprise, like a small business in America, may use Claude as their type of decision making and reasoning. But the whole point I was trying to make is, if you're using Claude Enterprise managed agents, for example, if it's not built on what you want it to be built on, because it's not, right? You know, you didn't train Claude to understand your business and everything like that, then it's not going to work for you as well. And that's why Palantir is kind of like a custom type of software for your company. It's custom for you. You know, it probably takes quite some time for you to explain to you what you're trying to achieve on a day-to-day basis or long term. It helps you reason, of course. And, you know, no Fortune 500 company, in my opinion, is going to use managed agents that Claude had rolled out instead of Palantir Foundry, right? Like, no Fortune 500 company can even do that. It's not even legally possible. There's just too many red tape. There's too much regulation. And, but anyway, yeah, I mean, I get why Palantir is selling off because of managed agents. I guess I do understand the fear now, because I did this research. And then there's this Mythos story that Anthropic last week released a limited preview of Claude Mythos, which is so spooky that it only gave it to roughly 40 vetted organizations like JP Morgan. And then there was allegedly a meeting between Scott Bessent and Jerome Powell, who called in all the banks to talk about the cybersecurity issue here. You know, Mythos is not a direct threat to Palantir, in my opinion. This is more of like a cybersecurity type of model, right? So I don't, you know, people see now there's this trend, and I think the algos are also, and the trading houses, they don't care if it's true or not. When Claude comes out with some powerful headline like this, you know, it just automatically just kills the software trade, right? Software sells off immediately. And, you know, it's pretty much just shoot now, ask questions later. It's typical stock market behavior, in my opinion. And then weeks later, people like me have to struggle to try to understand technology in a way I've never understood it before. And then people catch on, and eventually people start to step in and buy the Palantirs and the AppLovins again. Unfortunately, that's how this is going to work. And like I said, I'm picking my fighters. I'm choosing my fighters in AppLovin and in Palantir. I don't like Salesforce, for example, as a investment. I don't want to own Salesforce. I never owned Salesforce. Oracle, I actually own Oracle, and I actually think Oracle has a place for my portfolio, but it's not my top 20 holdings. And I'm probably flat on the name. I don't even think I'm red on it. I explained to you Microsoft. My situation with Microsoft is that I owned it for 10 years and I did sell it at like a 500% gain. I'm out of the name. I think I have enough exposure to big cap tech, large cap tech. I don't need Microsoft right this moment. And I was kind of disappointed about where they were heading, especially with their dependence on OpenAI. I'm not really a fan of OpenAI, if you couldn't tell. And so anyway, yeah. And look, I like CrowdStrike. If CrowdStrike was a screaming buy, I would buy it. I just don't think it is. And Adobe, I'm not interested in. I haven't done the amount of research to fully be confident in it. Same with Intuit. Same with ServiceNow. You got to really understand the business. I like Palo Alto. I haven't looked at that stock in a while, and I probably would buy it if it were really a screaming buy. But again, you have to look at the business. Do they have a moat that something like Claude can't disrupt? I don't know, but I'm pretty confident that Palantir and AppLovin, I feel like these stocks are a buy right now, but I could be wrong. I don't claim to know everything. And then, of course, as usual, I like to add Bitcoin. Bitcoin has been in a bear market since it rolled back from its highs. Remember, it hit like a 125K. It's been in a bear market ever since. Bitcoin has been in a bear market ever since. So anyway, I hope you guys check out my Substack writing. I put a lot of time and effort into it, and it would be cool to bring some of my podcast listeners over to the newsletter. Again, it's free. I have no plans of like trying to charge money for or put it behind a paywall. This isn't my full-time job in commodities. I don't. I just do this for fun, and I do the podcast for fun. And of course, literally 5 minutes after I bought Palantir stock, this is wrong. It says 5:32 p.m. that Donald Trump posted this, but he actually posted it at 10:30. I don't know why this is wrong, but he did post this on Truth Social after I bought Palantir 5 minutes later. Palantir Technologies, and then he put in parentheses the stock ticker, PLTR, has proven to have our great war fighting capabilities and equipment. Just ask our enemies. What's funny is that, Palantir is a big donor of Trump. And of course, it's like Palantir's worst week, right? They got their stock got crushed, and then he comes up with that. I mean, you can say all you want about how great Trump is, but this is bullshit. This is bullshit. You can't do that. But he can do whatever he wants. He can get away with whatever he wants. He's the president, and he deserves that right, I guess. So, I thought this was interesting and kind of like a reminder. Did you know that U.S. listed ETF cumulative flows by year, starting from January, that this is the strongest uptick in ETF flows? I mean, the ETF flows, part of the reason is because I think we have to be careful. Mutual funds really aren't a thing anymore, right? I mean, they are, but a lot of these flows have been probably transferred to ETFs. Can we agree on that? I mean, I'm not an expert on that, but I'm guessing that has something to do with it. But in general, the point is, regardless, this is the what do they call it? The underlying bid or the relentless bid. This is the thing that you're fighting against if you're like bearish stocks. No matter what happens, and you can see kind of like early March, the flows kind of came down a little bit, but this is what you're fighting against. This is what they call a rigged system. People are so upset it's rigged. Well, it's not rigged. You just have to store your wealth in like assets. And I do like Bitcoin, and I don't own gold, but I understand why someone would want gold to, store your wealth in. But like the stock markets are no joke. The stock market's no joke. This is why, because people automatically buy every week because of 401k and pension funds or whatever it is. I mean, there's that relentless bid, and ETFs. Retail investors like myself, we can't get enough of ETFs. I love ETFs. Love them. I love the SMH. I love the XLF. I love the QQQ. Don't let anybody tell you that they aren't that important. They are really good ways to store your wealth because you get a market cap weighted index and you get to own the best stocks within that index. I mean, they're amazing. And of course, the people that buy and hold them make a shitload of money. It's not just the traders trading in and out. It's the people that have bought it and they don't do anything, right? That's the whole purpose of Rigatoni Capital, is to tell you to be patient and buy stocks for the long run. All right, so we talked about Goldman Sachs briefly. I'm going to do the work on it tomorrow. I'll come out with a little more information on Goldman Sachs. I'll do that tonight. And we get JP Morgan, BlackRock, and Citigroup, and Johnson & Johnson, Wells Fargo. I mean, now we're in it. Now we're in the earnings season. It would have been nice if the US-Iran conflict would have been figured out by today. I'm kind of pissed off about it because I think that governments like the US are gaslighting us. It's kind of like 2 to 3 weeks to slow the spread. What was that saying? Stay in to slow the spread for like this amount of time. And then they kept pushing it out and pushing it out. It's the same thing with this US-Iran thing. It was supposed to only last for 2 to 3 weeks, and we're in and out. Boom, boom, boom. It's the opposite. This is a bullshitty type of thing that's happening right now. And there's a reason why I think Trump is unpopular. This could be a really black eye on his presidency. This isn't a show for politics. I'm just telling you, someone that is trying to be not on one side or the other, and I'm really just interested in investing. I used to be into politics a little bit more until you realize that it's just a show. It's just a show. They're not even the president doesn't run the country, in my opinion. I think it's probably you get elected, and then you're told how to run the country, right? Isn't that how it works? But Trump's a strong-headed dude. He's stubborn, and I think he probably made a mistake in this situation. Maybe he didn't make a mistake in the long term. I'll give you that. But I do want everybody to admit that the people that think Trump is the man and he can't do no wrong, at least admit that Iran has leverage in this war. I mean, they have incredible leverage over the Strait of Hormuz. And I hope people that think, regardless how you feel about Trump, you have to admit that Iran has leverage here, right? Can we all agree on that? So it would have been nice because then, man, we get Netflix, my favorite stock. We get Netflix on Thursday afternoon after the close. Awesome stuff, guys. And then I want to play you a quick video of Jimmy Liebenthal is like talking to Josh Brown in this video, and he's pretty much saying like to get this, he's kind of bullish on the data center and the data center infrastructure and chips, and he thinks Oracle is a good way to play it, and Oracle shouldn't be down this much. And Josh Brown's like, dude, like, look at Amazon. Like, why you want to buy something that looks like death? Let's play it.
That's where the
Amazon,
beauty is. I agree. I agree.
You want data center exposure.
You want data center exposure. You have Amazon. And now Amazon is talking like a chip maker. To Malcolm's earlier point, Graviton, Tranium, and Nitro are $20 billion in annualized revenue. You imagine they start pricing this stock like it's actually in the semiconductor business? In Jassy's own words, if they started selling these chips to third parties, like the companies they compete with, that could be $50 billion in annual revenue. If Amazon got a re-rate higher on a chip business rethink, like, you get the data center exposure that you get with Oracle, but a much cleaner story and a chart that doesn't look like death warmed over.
I love Amazon, Josh.
And Jimmy owns Amazon, he says. He owns both. We all own like a shitload of stock. So when we start debating it, it's like, well, actually I own that stock, but I like this stock better a little bit more right now. It's a lot of bullshit. So guys, here's a chart of Goldman Sachs showing you quarterly, but it's going back to December, so this is incorrect. Here we go, guys. This is Goldman Sachs. If you can see on the screen, I only went back to March 19th just to make it visually look nicer, but it's showing you, of course, March 2021, if you recall, Goldman Sachs had their best quarterly revenue ever, record-breaking, and we have never seen that quarter since. And if I'm gonna guess, that was kind of like when Robinhood IPO'd, and remember we got all those IPOs, COVID lockdowns were done. It was right before the Feds started raising interest rates, and we had the inflation scare, and that was like kind of peakish for growth stocks. So anyway, it's showing you what an unbelievable quarter they had back then. You know, that year was a good year for them. And then look, they had their second best quarter revenue number just this quarter, ending in March. And it's showing you how even their net income looks really good here too. So just interesting to see, you know, Goldman Sachs kind of firing on all cylinders, and the market sold it off this morning, and I won't know why until I do more research. Like I said, it has somebody said it had something to do with their expenses that they're guiding. Maybe I can find it real quick. Not even Wall Street Journal can tell me. Guys, have a wonderful day, and please check out my new Substack. It's under Rigatoni Capital. I posted how I I added 3 names in my portfolio. Again, that was Palantir, AppLovin, and Bitcoin. I'm on Spotify. I'm on YouTube. I'm on Apple. I'm on pretty much any podcast platform. Have a wonderful day. Thank you guys so much. Take care. Bye.